Today is a sunny day in the kingdom of Chozon. What's been going on with me recently is that there was a pretty rapid temperature change here. It went from very cold to very warm, and it got the better of me. In fact, this was my first ever Korean winter, Korean spring as well too. This is the first time I'm experiencing these seasons, and naturally there are a lot of new germs I'm coming into contact with, and there's definitely a seasoning process I have to go through. So at the moment, I'm feeling the negative effects of that, but it shouldn't interfere with this video. On the diet front, which many of you seemed interested in on the last video, which I really appreciate, that's actually going very well. I think we're nearly on week 2 here, more or less. And I lost, last I weighed myself, it wasn't even a full week from the last time I weighed myself, but I'm down 2 kilograms, which is really good. I'm using kilograms for once because my scale is Korean and it reads me in kilograms instead of pounds, so I have to get used to kilograms now. But 2 kilograms lost in less than a week is really incredible. Now, there's this concept in the keto diet of water weight loss, which is probably what I'm mostly going through, but still, that's an incredible sign. And as long as I stick with it, I know that this diet is actually going to increase in effectiveness in the coming months. So I'm very excited for the results. And outside of dieting too, on Monday, the weather was nice and I found the time. And so I walked about 23,000 steps, which is I think a little over 10 miles. It was all the way from the center of the city all the way to my home in the outskirts. And so that was a really great experience. I was able to walk near a river that they maintain for park purposes in the center of the city, and that was a lot of fun. I'd say that's definitely good for my health. So I'm going to continue the diet. I'm definitely going to ramp up the exercise. I need to condition myself naturally. So in the moment, for now, in the beginning, it'll just be low-level cardio walking, but 1 or 2, maybe even 3 weeks of that, then I'm going to work up and then switch back to my old weightlifting routine, which I did. Oh, I've done that many times in my life, whether it be high school, college, or whatever. But the last time I did it seriously, I would say, is 2017. So I hopefully will be doing that. I have this tendency where in the deepest, darkest months of winter, we're talking January, February, March, I go into a hibernation mode. I don't move around a lot. I don't want to do much. Just something about the weather just makes me completely shut down. It's a bad time of year for me. But now that we're coming out of it, it's the spring, just like armies would suddenly, after being sent back into the provinces during the wintertime, they're coming back together for the spring. And I'm looking around and there's a lot of work to do, and I'm happy to do that. So I'm considering this, my annual spring cleaning of what's going on, whether it be, my apartment around me or my habits or exercise, what have you. I'm always really excited for spring. That's when I get things moving and I'm on a big self-improvement train all the way to fall, which by the end of that self-improvement train, life is good. And then fall, usually I reap the benefits of it. I look my best. I feel my best. That's usually the best time of year for me. Okay, so on the personal income front, which I intend to make a video about sometime later, I'm going to break down my income month for month and how I get it. A lot of these personal finance income videos are really popular right now. But for the moment, obviously, I'm not ready to do that just because of what's going on with me today. Today is not the day to make a video about my personal finances. I will break it down for you in a future video. So this month, I grossed about $12,375. This number is ignoring dividends and all their stock market returns. So I ran some numbers, and so after my self-withholding for taxes and my monthly expenses, and also contributing to my savings, like savings outside of investments, I can safely invest about, of that number, again, net of all taxes, expenses, and all of their savings, about $5,500. That's what I intend to invest this month out of my income coming in. So it's going to be in 3 stocks, which I'm going to talk about today. And actually, one of them isn't even a stock. One of them is an ETF, which I guess that makes sense that we talk about that one first. So the first company is QYLD. It's a covered call ETF, and I'm primarily buying this for income. A lot of people don't look fondly on dividends. I do, just because I have an internet-based job where the income is very inconsistent. I need dividends, and I need to cash flow my investments, at least some of them. The majority of my investments are not cash flow dividend investments. Most of them are in growth stocks, which we'll talk about later. But I do always try to make sure I at least get like a presence in some of my favorite growth stocks, in my favorite dividend stocks, I should say. And just because I need that cash flow coming in outside of my online sources, because it's so variable depending on how my various businesses are doing. So QYLD, I think, should give me a healthy 10 to 11% yield. Obviously, we'd have to factor in the expense ratio, and it's a good monthly cash flow, all of which I know are doomsday hallmarkers for retail investors. But I think in my case, I can heavily justify my need for monthly cash flow, just given the fact that I don't have a proper month-to-month wage W-4 type of job. Again, I'm self-employed. I have online businesses. I need the income. I think out of everything I'm investing in this month, I think I'm only putting $1,000 into QYLD. And for those of you who don't know how it works, it's an ETF, and so what it does is it buys the QQQ, right? And so the QQQ, if I am correct, is all of the major stocks of the S&P 500. So, and it's focusing primarily on the tech stocks in the S&P 500. So Apple, Microsoft, Amazon, Alphabet, which is Google, Facebook, Alphabet again, Intel, Cisco, and a whole bunch of other stuff, Calls and Comcast. And the purpose of it is that it's designed to generate income by selling calls on ownerships of those shares. Now, there are a lot of negative articles about this online, and a lot of them just basically come down to the fact that they say, well, in the long run, this particular ETF will underperform the likely total stock market by a few percent, which is true, which is absolutely true. However, I favor cash flow in the short term because I need that to sustain my lifestyle. And also, too, an ETF like this one, just because it sells covered calls, which are options, on the stocks, it benefits a lot from periods of volatility. And so if you're investing in something that is looking to, or that will be good during periods of volatility, I mean, what does that sound like? The market right now, I mean, who knows where it will go? I'm a perma bear. I'm always bearish on the future. I think we're in store for a lot of volatility. And normally people try to profit from volatility by investing things like VIX and other like actively traded type of indexes that try to, again, benchmark volatility. This is a way of generating income from volatility. That being said, only about $1,000 out of this $550 I think is going to go into this. Just to be honest, there are so many exciting biotechs and gene therapies out there for me that I spent a long time following that I know will make more money. It's actually hard to convince myself or force myself to buy this just because I just want to put everything into my hitter stocks. So I have to really, really discipline myself and marshal myself just to even buy this in such a small amount. But I will be buying this one, QYLD, this month, and I already own it in my portfolio. Next up is Global Blood Therapeutics. I have a long history at this stock, but the long story short is I'm going to be buying this one, as much of it as possible this month. And so what's been going on with this one is that it's a very quiet stock. It's experienced a lot of run-up, most of which I've already benefited from. It was pointed out to me by Martin Shkreli, and now I own a significant amount of my portfolio in this stock. It's a play essentially on sickle cell anemia and sickle cell disease. I'm sorry, sickle cell disease. I'm thinking of the other anemia company I have, which is Fibrogen. Anyway, so they've had some very positive trials. In fact, they received accelerated approval from the FDA late last year. So I tried a two-pronged play on that. I was only just beginning to understand options at the time, and so I tried to buy these really ambitious out-of-the-money calls on GBT. And to be frank, they did not go well. I lost money on those options just because I didn't understand it properly. I bought them so far out of the money, and even though the stock went up 30%, I didn't predict the price it would actually find itself at. That's the thing with options that I don't like. It's hard enough to guess which stock is right, but I can't tell you which stock, when it's going to blow up, when and by how much, or how much it's going to go up and down. I can't tell you the exact price movements, and I can't tell you exactly when that's going to happen. That's too complicated. There are too many variables to go in there. In fact, I have more confidence in telling you where stocks will be in 10 years than I will be able to tell you where they are in 1 year. So I definitely have sworn off options for the time being, but I also bought, common share-wise, tons of this company, even some on margin even, which I quickly sold after. And I did very well when I had that 30% run-up after the accelerated approval. And as the chart says, it's been very quiet since then. And I don't think it deserves to be so. Just because it's a soon-to-be commercialized company, I think you're going to see an incredible performance from this company. And I always find that the quiet stocks, the ones that you don't hear much on Twitter about, are the ones that do really well. So I'm going to hold on this one until they commercialize their drugs for sickle cell disease. I expect that they'll file their IND, which is their drug application, as everyone's pointing out online, and also as the analysts are guiding, second half of this year. My personal estimation is I think this stock is going to near double. So when I think of this stock, virtual certainty I have, it makes me really not want to buy things like QYLD, which is only giving me about maybe a 10% per year. When I just know that this thing is going to double in a year. So it's so hard to even force that low level of diversification. But I will be buying much more of that just because out of all my growth stocks, I plot them according to when I think major events will happen. So the ones I factor in, like how much do I think this stock is going to appreciate and how well it's going to grow, and also how soon the immediate events that will verify my hypotheses about these stocks. So how soon is the event that's going to trigger the run up? I know catalyst investing is looked down upon, and I understand the reasoning, and I definitely agree on it. But with biotech is a little bit different, right? Because you just don't know for sure how something's going to turn out until a drug is approved or it starts to commercialize. A lot of times these things are already priced in, which I do get, but as always, there's always a bump up. Pharmaceutical companies, especially the pre-commercial biotech ones I invest in, they're definitely reliant on these major binary events, right? So I think in the future we're going to see incredible, not we, I mean I'm going to see incredible binary events from this company, and it's really hard to buy other stocks knowing that every dollar I put into this one will probably almost double, almost turn into $2. That's what I'll be buying this month. If I had to guess, I will be buying about $2,200 worth of this one. Next up is Sangamo. I've had a long history of this one. This is part of the hemophilia hypothesis, one that essentially there's a market for hemophilia drugs. They're soon to be replaced by gene therapies. There are a ton of gene therapy stocks I want to buy. There are just too many, other than obviously putting them all into an M1 Finance portfolio, which I probably should do. I'm just going to focus on picking a few individual ones at this time, especially the hemophilia ones. And I'm not really buying individual ones. I've bought just about every single hemophilia gene therapy or obviously new pharmaceutical replacement company. Sangamo appears to be one of my favorites for now. I've had such a bad history with this stock. I think someday it will see the proper returns, and I think you're going to see some interesting things coming up in the next year or so. And I want to accumulate more of this one. I don't think my position in it's large enough, so I'll be buying it. They had some pretty nasty data related to one of the smaller indications they were developing a product for, and it actually seemed like it almost invalidated their zinc finger gene therapy technology. But then obviously they published data from the other indications they were targeting, and it was doing quite well. So I think the technology, zinc finger nucleus I should say, technology is validated, and I want to buy more of this. In fact, I think I'm overweighted in Unicure Therapeutics. It's a Dutch company, and I need to get more of this one. So I'm looking forward to the major announcements and trials over the next year, and then particularly for hemophilia, I think it will really push this company forward in terms of stock price. In fact, it was trading over $20 when I was buying it. I've been buying this thing, I think, since 2016, 2017, around then. I think it should at a minimum return to the prices you've seen before, but this is a long-term play. But the reason I'm picking this one over all the others in my portfolio is that it's smaller. I want to grow it. I think we're going to see good things in the future for this one. No, the flip side of this one is also BioMarin. They're also developing a product for hemophilia, and they have a decent position in the hemophilia race. And recently they were downgraded, which, as a commenter pointed out, when a company's downgraded by analysts, that's usually a good contraindication. And I love how quiet the company is on Twitter. So once, which is known as Spark Therapeutics, that was also targeting hemophilia. They had some problems with their technology on that one, but that was recently bought out actually, and you didn't hear anyone talking about that one, and obviously that one was really disliked by all the Twitter investors that I see. So maybe I should add some BioMarin. I'll have to decide on that, but maybe just a token amount. But my heart is thinking towards Sangamo. Sangamo and BioMarin are both competing on hemophilia. So those are the three stocks I will be investing in this month. Coming up in other videos, I will be breaking down all my sources of passive income and my month-to-month income and how that's generated, how I run my online businesses. And also I'm thinking I might give a walkthrough of my portfolio, which is over 6 figures. That'll be in a future video. In the meantime, thanks for watching this video. Make sure you check out my M1 Finance affiliate links in the description so you can get in the stock market and you can invest with a portfolio of your own, create your own pies. When you sign up, we both get $10. I get $10. You get $10 when you fund your portfolio $100. So that's a 10% gain instantly if you sign up with that. And I want to thank you all for watching.